everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, November the 20th. A lot of hurry up and wait. Nothing going on in the markets yesterday, that's for sure. Markets seem to be waiting for something. We have a lot of economic data coming out today. I'll go over that in a minute. But real quick on the numbers, Dow Jones down about $9. NASDAQ down 17.5. S&P down 3. And then a Russell down just about 6 points. So a lot of quiet, a lot of choppy price action. And to be quite honest, you can see this is what we've been doing. Really nothing went on yesterday at all. And again, it seemed to be like the markets were just waiting for something to happen here, some sort of movement. What's the next catalyst? And last night, Ben Bernanke, I call him the madman, actually started speaking again and indicating that the Fed's going to do and what it takes. And Janet Yellen basically just reiterated what Ben Bernanke said, and markets actually popped up about additional 4 handles in the overnight session and then came back down again. So we're down about 25 cents. Again, no movement. It seems to be that there is absolutely not a seller around. That's what scares me, because there's nothing to push these markets lower. And I'm not sure if the sellers are scared or nervous, but we are coming into a little bit of weakness between now and the first week or so of December. Overall, we are coming into a seasonal time of strength, actually. We have that Santa Claus rally coming up, supposedly. But again, I am taking a step back and using a word of caution only because we are at these lofty levels already. And I mentioned many times how Traders Almanac, you take a look back, 50 years, we've been into this high, recent all-time highs 8 times, and we never had that Santa Claus rally. We actually had a sell-off because people were taking profits into the new year, hence the tax selling, what have you. So just, keep in mind, this is a very, very tricky market here, guys. The markets are very choppy. The price action the last, I'd say the last 2 weeks or so have been nothing but chop. Sideways consolidation, pop up, then basically a lot of chop like you see here in the charts from yesterday. I'm going to run into some indicators. I'm going to go into then go into the chart segment. But we are back on a sell signal in stocks above the 50-day moving average. And again, like I always say, this is, to me, indicators are just that. They're just indicators of guides to what seems to be happening at this time that I'm looking at it. But price is really what pays. Remember, if price wants to move higher, these indicators will shift back up again. Remember, indicators lagging to price. Price is king. So when you have these indicators rolling over, yes, it's a great sign. It's a great, and then you want to see what happens afterwards. Okay, so now price is starting to break down, and these indicators, now you get a good assessment of what's to come. Okay, so you have we have our stocks above the 50-day moving average. And let's take a look at the New York Stock Exchange 52-week highs. We just literally dumped yesterday. So we popped back up, but we broke back down again. And again, we are still at these lofty levels. Stocks are not moving to new highs, and they're actually starting to break down and moving to new lows. And I'll show that to you as well. So what's telling me is that the ETFs, the indexes are moving, but the stocks aren't. Of course, they'll select the stocks, select a few that are moving, but a lot of the high beta names are taking it on the chin now. A lot of the 3D printing stocks, what have you, that made their move are getting decimated right now, as well as the bigger flyers, and I'll show that to you as well. The SOX index here. This is not what you want to see. You want really to break out of this ascending triangle that I showed you a couple days ago. We are now breaking down from that ascending triangle. So it seems to be that money's flowing out of tech and going into consumer staples. And you look at the ratio chart here that I have, and just move this up a little bit. Here is a ratio chart of consumer staples versus consumer discretionary. And you have the S&P down here, which you were just making higher highs and higher lows, right, moving up along. And we did from December, from January of 13, we kind of chopped around. But then soon, right around May, we started really lifting high. But look what's happening now. We're starting to roll back over again. We broke this uptrend line here. So this tells me that money's coming out of higher speculative names, higher speculative sectors, like the junk bond JNK ETF, the Russell 2000 ETF, the IWMs, which is the ETF for the Russell, and going into some more of these safe haven sectors. And this is what we're looking at here and you need to pay attention to. Not that it's an immediate sell signal, but it's something to watch, because eventually when people start taking their money out of these higher flying names, it's going to affect the market. Okay. Now, here, take a look at the New York Stock Exchange new highs, new lows. This was on Tuesday. Boom. On Wednesday, we're back down again. So as you can see here, stocks are not making new highs anymore. Okay, so that's another concern of mine. Take a look at the U.S. dollar. Now, the dollar here is still flagging. Again, could it break down again? Yes, it can, but right now it's still flagging. Let's see if the dollar has an additional movement here, some strength here, because if it does have additional push to the upside, then again, that's just going to add more fuel of money being parked into the dollar and taking out of equities. Okay, but again, the market needs a correction. There's no two ways about it. You can't just go up every day, and the markets will not go up every day. Eventually, there'll be a catalyst that's going to take the wind out of its sail, and the markets are going to just sell off that much harder and that much faster, because there's no break in the market. There's no, 50 points down, 100 points up, 50 points down in a stair-step fashion. So that's what's concerning to me, that you can wake up in the market, S&P, ES can be down, 20 handles, and that's happened many, many times. Okay, let's take a look at the VIX. Now, I mentioned yesterday that we have a sell signal in the market if you go into via this way. Here's the VIX. Here's the Bollinger Bands in black line, and you can see we closed outside of the band on Monday. Friday. We closed outside of the band. We actually closed inside the band on Tuesday. And on Monday, and on Tuesday we followed through, giving us a buy signal on the VIX, a sell signal on equities. Now, could it be a bunch of chops sometimes? Sure, it can, but something to keep an eye on. This is actually a pretty reliable indicator in a way of trading. Not even if you're not trading the VIX, you could still either short the market or buy the market via what the signal on the VIX is doing. But this gave a sell signal. Now let's see if this does follow through. Okay, I want to show you one more WTI crude. And again, I like crude here at these levels, but you have to be careful. Like, I'd like to see crude, and again, I'd like to see us take out the $95 area, which the 20-day moving average comes right into fruition here. And even if it comes even lower, this little cluster area that's been consolidating, I like to see it get taken out. We are at the 20-day lows, and as you can see, when you get to these 20-day lows, we do pop. Okay, it hasn't happened yet, but let's see what happens. You do have positive divergence on your stochastics, your MACD, and your RSI. So indicators are moving up while price is being stagnant. That is a good sign that we should get at least a dead cat bounce. And that's how you want to play it, just that, a dead cat bounce for now, until we can break this bearish symmetry and start making higher highs and higher lows in that stair-step pattern that I mentioned earlier. Okay, let's take a look at the stocks. As you can see here, E-mini daily chart, we're down about 50 cents right now. No movement at all again in the overnight session. But we do have a lot of data coming out. So look at your economic calendar. A lot of economic data coming out at 8:30 and at 10 and 10:30 as well. And then, of course, FOMC, by the way, is going to be released at 2 o'clock today. So that will be a market mover. Markets may do absolutely nothing until then. So anyway, we're still up on the 8 EMA. Okay, so until we break down this 8 EMA, the first logical spot would be about 1764, what I'm looking at for the pullback. When you get this far away from the 20-day, you eventually will revert back to the mean, at least the start of the 20-day moving average. Now, we're way away from that. As you can see, we're at 1782, 1762, so let's just call it 20 S&P points from there. So this is where we are. I think at one point you're going to have that revision back to the mean again. Okay. Here's the Spiders daily chart, just to show you we had really no movement, as you can see. Basically an inside day from the previous day. So nothing really much to talk about other than it's holding its upper end of the range again. And again, that's bullish. There's nothing wrong with that. Diamonds holding true here. Almost about 31 trading days. We've been down only about 3. Absolutely amazing, and actually kind of silly if you ask me, that the markets continue to chug higher. And remember, when you have all these little dojis and these little indecision candles, and you have 1 or 2 up days, you're going to see a candle at one point where it wipes about 5-6 days of trading in one day. And that's what's going to happen, because we don't have that sidesteps pattern. And you can see we haven't had that in a long time. We come up, we look. If you could look back here 2-3 days, we took back about a good 10, 15 days of trading in 2 days. Gap down the next day, and then again within 4 days we were down. We wiped out pretty much most of July's move. Just looking back, just to give you an example. So again, a word of caution here. You never know what could happen. The transports starting to lag a little bit here. Now, if oil starts to pick up again, then the transports will definitely come under some pressure. And IWMs, to me, it looks like a risk-off type mentality. When you're looking at something here, we had that flag we broke out. Now we're back testing it. So nothing wrong with this, but now it needs to start to move higher again. Okay, we back tested the upper end of this downtrend channel, which is fine. Usually that's what happens when you break out of a channel or a flag pattern, and we need to see now this to move higher. Now XLF, we did break out and holding the breakout, which is a good sign. And again, if interest rates are going to rise, I think you're going to have the banks, it's really running on its own cylinders here, regardless of what the markets do. I do think that if the markets sell off, banks initially will take a hit, but I think that the banks will move higher regardless of what the market does. If the market would decide to sell off a little bit, only because when interest rates rise, of course, banks do very well, and I think, and that's what you're having now is the interest rates are starting to rise here. Okay, so that's a good sign. And I still like Goldman, but I like Goldman on a pullback. I wouldn't be chasing it here. 163 to 164 will be a good initial buy-in or an add to if you're long Goldman Sachs. Again, we've been talking about Goldman for a while. I do like Goldman, and I really like JP Morgan. I really like JP Morgan. This held absolutely perfectly. But again, we're overextended now. Our Bollinger Bands, we're way outside the band. Look at how far we are away just from the 8. Let it come in and back test this for your second entry. Because when the back test happens and holds, that's telling you that this is a true breakout. Love JP Morgan here, like I've been talking about for the last few days. And again, as you can see, momentum coming in, volume coming in. So this is actually holding true, confirming this breakout. Networking sector, again, looking weak. We're still valid in this head and shoulders pattern, so the ETF is coming under some pressure, and what I would be looking for is the weakest stock in this ETF and looking for an entry to get short. And again, Apple really not doing much of anything, just consolidating. Look at the Bollinger Bands. The Bollinger Bands are pinching, telling me that we are going to have a little bit of pressure, meaning that it's building pressure, building pressure. We can have a breakout at any given time, breakout or break down. Let's wait and see what happens. We did have some movement, and then we failed a little bit, but I would personally give it a day. Let it break out for the day and see what happens the next day, because obviously you'll have plenty of follow through to the upside and or downside if it decides to break down. And lastly is the Qs, as you can see here, coming a little bit under pressure, but holding up well up to 20-day moving average. Nothing wrong with the market other than it's grossly overbought, guys. Valuations are extremely high. You can listen to CNBC and the pundits tell you that, oh no, it's cheap here, you gotta buy it. But at buying it up 31 days, only 3 down days to me is crazy. Now, if you're looking to add to your longer term positions or you're a swing trader, what I would be doing is tightening up stops. I wouldn't be adding to your position if you're still holding from, let's say, the October 9th or anywhere in October. I would be tightening up stops. Okay. Now, if you're looking to ride out any type of little bit of a blip that we have, hoping to get an additional push going into the end of the year with this so-called Santa Claus rally that we have, then that's another story. But I would at least buy some protection just in case to ride that storm out. Okay. But again, market's a little bit iffy here. Be very, very careful. I haven't seen any great setups here, guys, at all. If anything, I've seen the markets actually, 5-minute candles dip down, 60, 70 cents in these higher beta names just to rally back up to where it is. So a lot of chop, a lot of indecision in the market, and I think the markets are waiting for the next catalyst to push higher. And if we don't get that, we will probably get that pullback. So we'll see what happens. To me, Ben Bernanke talking its game, so to speak, its book. I think that you're going to have some good news come out of the Fed. Now, is it priced in? Do we all know about this? Do they sell the news? It's not what we think or what they say. It's how the market reacts to that news. Remember that. Okay? Give it some time. And again, I would be at least If obviously if you're day trading, be flat going into the FOMC minutes today at 2 o'clock, and then see how this market reacts to what's going on, and let's see if it gives it that sell the news type mentality or not. All right, guys, have a great day. We'll speak to you tomorrow. Take care.